Welcome to Pressure Points. Our topic is post-earnings for Tesla. Three key topics. First, timing of this next generation vehicle. Second, what sales are going to look like in 2024. We'll talk about FSD. Those are the three most important. Then we'll do a quick tour through the toy department and some other topics that came up. But we'll jump to the pressure point that we highlighted, which was unique this quarter. Typically, it's around auto gross margins, X credits. This quarter, we talked about any sort of commentary about what the demand environment looks like in 2024. And I had predicted that the street was right around plus 5%, and those numbers would come to down around 5%. And in the shareholder letter, the company outlined the exact same language that they had, which said to expect meaningfully lower, notably lower, growth rates in 24 versus 23. And then on the call, the question came up and Elon commented that 2024 should be up. This is in terms of sales, but sales, given what's going on with ASPs, have been relatively steady, is going to generally mirror, deliveries should mirror sales. Is the expectation Elon mentioned was for that to be up in 2024 over 23, which is a big surprise to me. Later in the call, someone asked a follow-up question to that, and Elon's comment was this June quarter should be, quote, a lot better. And so I'm going to put all that into the stew here, look at what the comps were last year, and talk about what ultimately I think that this means for deliveries for 2024. And again, going in, the street was generally looking for about 5% growth in deliveries. I think that's going to come down to probably 1% growth. I mean, they're saying it's going to be up. And then I was just back testing the model to see how hard is it to get for deliveries to be up 1% when you start out the year. The March quarter was down 9%. It's just a big hole to dig out of. And the answer is that it's going to be a heavy lift to get the June quarter to be a lot better than March. He didn't say it's going to be up. He just said it was going to be a lot better. And June is comping off a wicked 83% comp a year ago. So based on my modeling, I've got them down about 4% in June. So I do think that checks the a lot better card. And going to around 8% year over year for the back half of the year. And you kind of put all that together and you're up 1%. I think the probability of this is less likely, a stretch, but still doable. And so overall, it was not as bad as what I had been expecting because I was pretty confident that they were going to be talking about 2024 being down over 23. So we'll see how the year plays out. I still think it's good for investors just to think of this year as a throwaway when it comes to delivery and sales. I would just do a quick aside in terms of profitability. I did come in slightly better on a margin basis. The auto gross margins X credits, it was 16.4%. The street before they had printed was looking for 16.2. That was down from 17.2% in December. So we saw some stabilization there despite the weak delivery numbers, which is a sign that let's just kind of throw 2024 out the door. The business will survive. They got $28 billion in cash, and they'll be able to get to the second takeaway here, which is timing of the next generation vehicle. And the actual numbers, of course, we haven't even talked about them yet, but for the quarter, they slightly missed revenue, slightly missed earnings. The stock traded up 5%, kind of immediately on this comment that they are expecting a pull forward in terms of the timing of this next generation vehicle. And they previously had stated 3 months ago that that vehicle would be out late in 2025. And so now they're moving that forward. And the assumption before the earnings call was that investors were thinking that probably means mid-25. And Elon gets on the call and says he think it is going to be early 2025, if not late 2024. And of course, all the lights are flashing. Be aware, this is an Elon forecast comment. Usually he's wrong on timing. But either way, just the fact that they are continuing to pursue this, given the recent media reports about some transition, some canceling of some products like Model 2 potentially shifting to Robotaxi, whatever it may be, just there was a relief in the stock as the company was essentially saying to investors, don't worry, we're going to get to the other side of this and revenue growth will return in 2025. They filled in some of the blanks and said that they're going to be able to do this with their existing manufacturing line, so they don't need to build Giga Mexico to come out with this lower price car. But they stopped short of being very specific about, would this be Model 2 they're talking about in late 24, early 25, or is this the Robotaxi? And I've gone back and looked at all the commentary on the call about this topic, and you can look at it either way. They're suggesting Model 2, suggesting Robotaxi. My bet is that it is Robotaxi. And I'm going to read a question that got me to that point. This is kind of halfway through the call. There's a question, and it was, can we get an official announcement of the timeline for the $25,000 vehicle? And Elon's response was, well, we will talk more about this on August 8th. So, but really, the way to think about Tesla is almost entirely in terms of solving autonomy and being able to run, being able to turn on that autonomy for a gigantic fleet. He also concluded the call by talking about the importance of FSD, as you really cannot understand Tesla's business unless you get FSD. So there seems to be this urgency around FSD, and Robotaxi kind of plays into that. So I'm going to put the weight into that. I think they're going to say on August 8th that they want to have a Robotaxi out in the beginning of 2025. The fact that they get a Robotaxi out doesn't mean that they're going to sell that many of them. Think back to what happened with the Semi, and they got it out, but then they take a long time to actually start to ramp it up, or what's going on with Cybertruck. And so they can check this box of having an event on August 8th, getting a Robotaxi out the beginning of next year, and then potentially they start running into some headwinds related to lawmakers allowing these Robotaxis on the road. They did mention that they are making progress. There's a couple states that are making progress, and they felt that there was going to be this domino effect. But either way, I think that that's what they're talking about, is Robotaxi early next year. So that was the second point. Just, I guess, related to FSD, that gets us to the third point. As I mentioned, Elon is all in on FSD. The total number of miles, cumulative miles driven by FSD, saw a reacceleration after the 12.3 beta came out. And so, I'll put this into perspective, is when these transitions happen, just think about what's happened with GPT, for example, and the uses there. You get accelerating numbers off of higher numbers, and that's when you know there's a paradigm shift going on. In the case of cumulative miles driven on FSD, it actually the growth rates had decelerated. It went from 73%, this is quarter on quarter, 73% quarter on quarter in the September quarter, to 56% in the December quarter. And then if you look at the chart that they gave on their shareholder letter, it basically implies that we've seen a reacceleration to 64% growth in the March quarter. And they specifically said, he specifically said on the call, 300 billion miles with a B driven. I think that was a slip of the tongue. There's no way it could have been that. But 300 million miles driven by 12.3, that gets you to a 64% growth in fully cumulative autonomous miles driven, which is a reacceleration from where it was 3 months ago, and impressive. And again, the company is changing kind of the language to investors, and basically saying, related to FSD, is that if you want to invest in this company, you have to believe in our FSD autonomy strategy. And that strategy effectively is to sell the hardware for a low margin and then make it up with a higher margin. One other caveat, or one other postscript related to FSD, is they did talk about they're in conversations with one automaker. I think they've said that in the past, one automaker related to licensing FSD. They said by the end of the year, they think they will have one, if not two, automakers licensing this. To me, that just makes sense because all the other car makers are slowing down. They did mention that it's going to be a few years, 2 to 3 years, before any sort of licensed OEM actually sees a car come to market, because they still have a lot of work the OEMs do on the hardware to enable FSD. And so that is the FSD piece still on dead center of the company's roadmap. So those are the three most important pieces. I would just kind of do a quick tour through the toy department. Optimist, he reiterated that that they're doing will soon be doing limited kind of work in the factory, and that they potentially could start selling one. He reiterated that this could be the biggest value unlock for the entire company. I would say let's just hold off on getting too excited there. I want to leave that still on the table for optionality value because it is Tesla and they could crack that code. Separately, they talked about the ride-hailing fleet and mentioned that it's going to be like a mix between Airbnb and Uber, or Airbnb and like an own fleet. And so it sounds like Tesla is going to actually own some of the cars themselves. And then separately, a consumer can own the car, or a small group can own a group of cars and put those into the fleet. And my takeaway is that this is more confirmation that Tesla wants to actually own part of the fleet. They can call it a 3-year payback on some of those vehicles, and the margins just start to really skyrocket in the later part of the years. Again, all dependent, can they crack their code? But if they can, that this could be a significant unlock in terms of value. Other in the toy department is they talked about this AWS opportunity, essentially as they go into hardware 4, that the hardware is so powerful that you can, when you're not using your car, essentially lease it back to an AWS type of hosted model that allows them to do AI inference training, and this would be the biggest supercomputer kind of a thing. Sounds great. I put it in the toy department for good reason. And so that was my general sense, is that at the end of the day, this is an ugly quarter for March, just kind of bringing it all together here. March was an ugly quarter. The outlook was more optimistic than I for sure thought. We'll see if they can get there. But either way, they are optimistic about kind of hitting this next growth curve. And for the bull-bear debate, nothing's going to change. I think the people who are skeptical are going to say this is just a melting ice cream cone, and we saw it in the March results. And the people that are positive are going to say they're making something great that ultimately is going to see an inflection point coming up, whether it's 2025 or 2026. I continue to be a shareholder, and we'll wrap our pressure points. Bye for now.